Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, 23rd day of August, 2017, and this is the Daily Report for gold and silver. The dollar giveth and the dollar taketh away. We do have a moderate upside move in the precious metals markets, mostly predicated on dollar weakness, just as yesterday's dollar strength took it away. To gold, closing at $12.96 today, up about $5 on the day. Low on the day, $12.87. That low is important because it did avoid any stops getting hit. Silver, $17.08, putting it up about 10 cents on the day. As I said, it's been all about dollar weakness today, down about 0.4%, a decline of 39 points, closing at 93.07. And the equities markets falling slightly, an 87-point drop in the Dow, closing at 21,812, 62.78, a 19-point drop in the NASDAQ, and an 8-point drop in the S&P at 24.44. Traders, while the market is up about $4.50 and in essence gaining back the losses from yesterday, we can see that the market has been solidly trading above $12.86, and I truly see a distinction and a key difference from the series of tops that we have seen and failures at 1300 recently this year when compared to the current market scenario. In terms of a key difference is if we look at the previous couple of tops, this top here, of course, this top here at 1300, and to some degree, I'm not going to really count this particular top because it's part of the action that's going on, but consider what happened on the first two occasions when the market penetrated 1300, kind of draw our $1,300 line, and on each of these occasions, as the market went up, it would fail just below 1300, but more importantly, it formed pretty much a perfect V in that the amount of time, the number of days spent at this particular price point was 2 here and 2 here. In other words, that perfect V in which the market came up, it failed, and then began to move down to lower pricing. At the same time, we saw some real support at approximately 1200, and that's what's defined this trading range between 12 and 1300. However, on this attempt, I'm noticing something remarkably different and very, very important as we watch this market and the price point develop. And that is, we had the initial failure, which was very similar to the last two occasions. In other words, we had 2 days in which we had an attempt to breach 1300. We had the market come down, but rather than falling all the way back to 1200, as we have seen in the past, the market found support at a much higher price and then began to move up. Not only that, over the last couple of days, we have seen this market consolidate in this area, as I've said, and really what it is forming is a pattern that was first identified by Steve Nissen, which I consider to be the father of Japanese candlestick understanding here in the United States. He was one of my early mentors, and in fact, the first book that I wrote in 1993 really gave him credit, and he did put something in the footnotes and the back cover about what I was doing with Japanese candlesticks, but he identified a pattern simply called a scouting party. It's not a Japanese candlestick pattern, it is unique to himself, but in essence what a scouting party is as a market climbs to new highs or falls to new lows, at the point in which it hits that resistance area, in this case 1300, typically what will happen is in a scouting party, the bulls will go and test the resolve of the bearish faction. You can see that here. You can also see that here as the market trades above that resistance area only to fall back. And what this scouting party entails is the first tests of an effective move above that price point. The next step in a scouting party is where the market actually trades and closes above this particular price point, and he labels that a beachhead. In other words, claiming the area for the bulls and developing a solid level of support in this area rather than resistance. To some degree, we do have a beachhead that is forming, but it is forming just below the price point. So for this particular pattern to be complete, we would need to see a break and close above 1300 and effectively some congestion in that price point with lows coming in just at around 1300 rather than the highs coming in just around 1300. But traders, I absolutely and categorically see a unique distinction between recent attempts and failures to trade past 1300 and this particular scenario that we're looking at now. It is not like what we've witnessed in the past, and I am still of the firm conviction that what we are looking at could easily be the steps that are necessary to take place before the market breaches and closes above 1300 per ounce. Therefore, traders, my recommendation is to maintain your current long position as well as maintaining your current stop. And traders, as you know from the opening letter today, where I said the dollar giveth and the dollar taketh away, we talked about the fact that this oscillating dollar, especially over the last couple of days, has been the primary factor in gold rising or falling. We also noted on yesterday's show that we've seen some real consolidation in this area, and I've been on record really looking for 92 as a base area for the potential for this long 10% drop to actually find some technical support and maybe some sort of a bounce to the upside. And we haven't really hit that, but what I can say is that with this renewed interest in the accumulation of gold, 30% increase in net long positions last week alone, to me is really signaling a shift in market sentiment. We've got some of the equities that are still moving strongly, getting into potential danger if, in fact, the, quote, Trump trade, that optimism over his ability to implement infrastructure projects, to change the tax code and get some tax relief, if he cannot accomplish these things, whether or not these record levels can remain in U.S. equities has yet to be determined. And so not only have we seen the majority of the gain in gold, which has been about 12% this year, be really part and parcel due to 10% decline in the US dollar, we could in fact see the dollar stabilize and bounce to the upside, and at the same time watch gold continue to rise because of bullish sentiment. As I talked about in the technical studies section today, I am noticing a distinct difference between the two attempts and failures to take out $1,300 and this current market scenario. It seems as though we are forming a base at these upper levels. We're sitting at around 85, 95 in terms of a range, and that is distinctly different from the V formations that we have seen form on the last two failed attempts. I do believe that there is absolutely a high probability that 1300 in terms of a price point will be thoroughly taken out, and that we will get a close, effective close above that. However, for today, we are still remaining about $4 from that price point. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.